Thank you very much for joining, everybody. My name is Andrew Moriarty. I'm the Senior Pricing Analyst here at Mintech, and I'm going to take you through our H1 2021 coffee market update. So this is an update on what we've been hearing in the market and what some of the price trends are that have been unfolding. And so if I just go ahead and real quickly run through the agenda for today, this is very sort of top level, but I think it'll give you an idea of the sorts of topics we're going to cover in a bit more depth. So we'll first start with Arabica and what's happened on the exchange, in particular the price movements, but I'll be going into the fundamentals quite deep when we get into Brazil's production worries for 2021-22. So that's the crop that'll be harvested in a few months' time. They'll be starting harvest there. And then at the end, I'll kind of cover off with the state of the Robusta market, a market that really isn't getting an awful lot of attention right now, but I think deserves a little bit of discussion, especially given some of the issues that we're seeing around freight in particularly Southeast Asia. So just real quickly, for a little bit of background on Mintech, Mintech is a company that's been around for about 35 years. It's a market leader in collecting and curating commodity price information, particularly on those, kind of tricky, non-exchange traded or very opaque markets with more than 14,000 price points. Now, I work in the proprietary pricing team. So what I do is I speak to my network in the market every single week, as do the rest of my team. We all cover different things. So I'm coffee, cocoa, sugar, pepper. We get price data points, start discussions with people about what we're hearing, and then once every week or day, or potentially every month if it's a monthly series, we assess those using our own proprietary methodology. And what that allows us to do is to come up with a fair value price of where that market is at that particular point in time. And we publish it every single week. And coffee, that will be published. Actually, I'll do the assessments later today, and that'll be for coffee differentials from some of the most common origins. So just to give you a quick little bit of background on that, and as I continue forward, we'll start with what's happening on the exchange in New York. So what you're looking at here, as I'm sure many of you will probably notice, is the New York C contract for Arabica. This is a second month continuous going back to early 2019. And you can see from, right now, we have the forward curve then extrapolated on there right now. I think there's a couple of interesting things going on. If you take this chart back a little bit further, and I think if you were a third-party observer walking into coffee, and you just looked at that chart on the screen going back several years, and you're seeing that kind of, between about $1 and $1.25 sort of range that we've been stuck at for several years now. I think as an external observer, you would probably say, well, what's really going on in this market? It doesn't seem like there's all that much excitement to me. And actually there is. And I think that's kind of one of the big things I want to cover in this webinar today is what's actually going on in the background and where that's being priced in. Another point that I would make about this very quickly is looking at this forward curve. So obviously when we're looking at this contango, what I typically have done, and the kind of rule of thumb that I tend to use, is if you're looking at the contract spreads, especially on some of the nearby months, I typically tend to expect about 1 cent per calendar month, or roughly 2-3 cents, sometimes a little more, sometimes a little bit less, as that kind of implied cost of carry between those months. Now, for about a year now, as a result of the pandemic and some of the lockdowns and the drop in demand, we have seen storage costs go up, and in fact, storage space become somewhat difficult to come by in many areas, particularly if you're looking at like the US or Europe. Now, what we're seeing right now is actually pretty tight spreads on a lot of these contracts. Ordinarily, the point that I would make here is to say that these relatively tight spreads that we're seeing right now seem to be indicative of view of demand and supply rather than just the pure cost of carry. A lot of times in Arabica, you could almost not even look at the forward curve. You could just guess and say, plus 2 cents, plus 3 cents, plus 2 cents, and so on. Whereas right now, we're not seeing that. And yet storage costs haven't really come down all that much. They've dropped slightly here in Europe. We've seen a little bit of an easing on that, but there's still, generally speaking, a surplus of coffee out there, and that's what's being reflected in this forward curve. That's something I wanted to mention very, very briefly as we continue to move forward. The commitment of traders is another thing I want to go through, and I think it's also maybe not the most particularly essential reading right now, but I do think it kind of gives you a kind of an interesting view of what's going on in this market. So again, we have that second month continuous C price on the left hand side, and then on the right hand side, so that yellow line, I've plotted the managed money net position in New York from the commitment of traders. Is a quick little aside, I'm sure many of you are familiar with that, but what the managed money represents is what was in the old legacy reports referred to as non-commercial. So it's generally funds. It's sort of speculative trade, not index funds, but other hedge funds, for example, other financial institutions. It's largely a sign of speculation. So if you take the producers, the sort of commercial side out of it for a second, you'll find that the managed money tends to track pretty closely with Arabica. As to which way you want to draw the correlation, that's a sort of a matter of interpretation. My interpretation looking at this is we are seeing, if you look on the right hand side, a net long position of around 20,000 lots right now in New York. This means on its own, not necessarily anything, but the way that I tend to read this is that for the most part, this tends to be what I might call a lagging indicator, right? It's sort of a confirmation of trend, if you will. So as we see that net long position increasing, which we have been since around kind of the middle of October of last year, so for the last kind of 4 months now, we've seen that position increasing. That in and of itself is indicative that, in my mind, prices would be moving up, which, in fact, if you look at the blue line right behind it, surely it has moved from about 105 up to about 125 on the second month right now. So looking at the May contract. Now, where suddenly that commitment of traders starts to become quite interesting is when you start to see a turn. And you could already see in the last week, we've seen a slight trimming of that net long position in managed money. And that could be indicative of a turn in the price. So something that's worth looking at is, to me, like I said, it's sort of a lagging indicator, tends to be a confirmation of trend until you start to see it shift the opposite direction. And, if you go back to, for example, around about kind of August of last year, we saw, you can see that very high position, around about sort of 45,000 lots net long. As soon as that turned the corner, look the direction the price goes after it. And you can see the same thing earlier last year. You can see it sort of late 2019. Every time it turns the corner, that's kind of where the price is headed. So it's something that's worth keeping an eye out if you don't already, is looking at this managed money. And then I think another story, if you're talking about, okay, what's driving the C contract right now? Well, the certified stock levels are talked about a lot. I'll come on into a minute about whether that should be the case or what that really kind of means, I suppose. But if you look at the certified stock levels, if you remember, one of the big stories kind of late last year around like August, September, October kind of time was this drawdown in the certified stocks. And so you can see the blue line, which is the total line there on this chart, moving down, from about 2.2 million bags at the beginning of last year down to about 1.1 million bags at its low in September. Now, this coincided with that rise that we saw, just a few weeks later in New York, with that managed money position sort of turning net long again and continuing to add to that long position. Now, at the same time, I think the other underlying story is what I've tried to present here in these sort of colored bars down below, these columns down here, which is the total amount and the origin of these certified stocks. So you can see that generally, from the most part, the certified stock has tend to be made up of sort of commercial grade Honduran coffee. That's been by far the sort of biggest share. You can see that back in Jan 2020, there were almost 1.6 million bags of Honduran out of a total 2.2 million bags in certified stocks. And so we've seen that draw down over that time period. And in just a moment, I'll come on to sort of potentially why that is. But what we've seen since September is the increase of this purple share, which is Brazil, which is, to me, one of the more interesting stories that we're hearing right now. And again, is sort of playing out in the diffs that I'll come on to in a second. And you're seeing that share of Brazilian increase every single month to right now, just a few days ago with the most recent report, we have almost over 40% of total certified coffee being Brazilian that has basically passed grade and been accepted into the exchange warehouses. So we've seen since September, that increase in certified stocks being driven entirely by deliveries from Brazil, which is very unusual. The majority of Brazilian coffee, being natural, doesn't really pass spec, so it's not really going to make the grade. Now that's due to mainly semi-washed Brazilian making the grade and actually being passed by the exchange. Now, if we move into just very briefly on the stock level situation as well, the GCA, so the Green Coffee Association. So out of the US, what they do, again, for anybody who's not particularly familiar, they are tracking coffee stocks in all warehouses in the US. So private stocks, once it leaves, it gets imported, goes into a warehouse. Once it leaves that, and it's sort of, in, for example, like a roaster's hands, it's not being counted here. But or typically not being counted here, let's say. But generally speaking, this gives a pretty good view of what the stock levels are in the US. And you can see on the left-hand side, that big red circle. That big red circle is looking at January 2021, which is the most recent data we have, where we're seeing, well over almost 6 million bags in GCA stocks right now, very, very close to it. And which is, you can see sort of on the upper end of average if you look back all the way back to 2002. In fact, it's not every year has been plotted on this, but sort of highs and lows over the last 20 years have been plotted, and you can see sort of over the last 20 years on average we're kind of on the slightly upper end of average in terms of GCA stocks. And that has also, like the certified stocks, been increasing over the last couple of months, really since around the low in November of last year. So given that, okay, well, what does this really mean in the grand scheme of things? One, I would say, is that if you're looking at direction of the C market, you will typically find that these certified stock levels tend to be greatly interpreted because it's something that's relatively easily available in terms of, looking at some of the fundamentals of the market. It's easy to get hold of. It's relatively easy to say line goes down, line goes up. That's giving me a sort of an S&D perspective. And the GCA kind of more or less the same thing. Do they necessarily mean that if the certified stocks are falling or they're going up, that is indicative of greater or lower supply globally? Not necessarily, but it's still a pretty good metric, and it's still worth looking at in terms of giving sort of an overall global view. And again, sort of most importantly, to kind of reiterate that first point, it's what's available. It's good information. It's very transparent in the way that it's published, and so it's something that these funds will be looking at quite frequently when they're looking at sort of news items. And then moving on to finally the diffs pricing. This is where I think things start to get quite interesting in coffee. So we've seen earlier that we've kind of been trading in a pretty narrow range for several months on the C contract. We saw that rise kind of late last year, and we're kind of up around 125, but we kind of been around that sort of $1 to 125 level for quite some time now. And if you stretch that back even further, it's it's even more apparent that kind of maybe 90 to 130 range we've been at for quite some time now. So then you would expect that if there's not a lot of movement on the exchange, that there wouldn't be a lot of movement in the diffs, but that's actually not really what's happened. Now, you'll see on the left-hand chart that these diff prices go back to around about June of last year. Now, that's when, as Mintech, we started assessing these prices for our Mintech benchmark prices. So those are the ones that are sort of assessed by my team, including myself. So these MBPs only sort of start in June of 2020. But what I can do is give you a little bit of context of what this would have looked like before those prices started, which is to say that in these three instances, so my Brazil Santos, it's a 2-3 grade, so a screen 1718, a Colombian Excelso EP, and then a Honduran HG, which has not been launched yet, but will be launching very shortly. Those three, and indeed pretty much all diffs, remain quite firm. They're very, very well supported at current levels. You can see on that chart that they haven't actually moved an awful lot in a couple of months now. We've seen, if anything, a little bit of a tick up in Brazil over the last couple of, let's say, sort of 6 to 8 weeks, as people start talking more about some of that supply tightness that we could be looking at with the next crop in Brazil. But overall, if you were to take this graph back even further, you would see that the majority of these are sitting around about 20 to 25 cents higher than they would have been in 2019, so sort of pre-pandemic. So what's causing that, I believe, is sort of a number of factors. One, if you start talking about cost of production, we are, with the exception really of Brazil, nowhere really near the cost of production for the majority of these these origins. Now, with the diffs being as well supported as they have been, let's say, over the last kind of 9 to 12 months, we've perhaps been a little bit closer to that. So, for example, looking at that Honduran HG, most recently assessed at about plus 20 cents to New York. That's using the second month contract. So if you're looking about 125 on the second month, then you're looking at about sort of 145 outright. The Honduran cost of production is typically not quite that low. It's normally a little bit more expensive than that. And this is something that people in the industry have been warning about for several years now, is might we start seeing some production drops as things like husbandry just sort of fall by the wayside. Farmers can no longer afford to, properly fertilize if it's obviously non-organic. Might we start seeing these production drops materialize either in the 2020 to 21 year, or perhaps in this upcoming year? And the answer seems to be, yeah, we're kind of getting there. Yes, we are seeing some of these drops. So Honduras, for example, has been, kind of a tale of misfortune, I suppose, in a sense that both, if you remember back to last November, Honduras was hit by two hurricanes back to back. Both Alpha and Iota came along and caused some pretty good damage in Honduras. And so they're likely to have lost around, according to sort of official estimates, about 104,000 bags. That's according to that IH Cafe. But based on the contacts that I speak with in the market, most people are expecting that to be a bit higher than that, potentially in the sort of 150 to 200,000 bag range. And that's 69 kilo bags. So if you were to convert that to 60 kilo bags, then you would be seeing an even larger drop. You would basically multiply that by 15% to add on top. That would be the kind of 60 kilo bag drop that you would be seeing in overall production in Honduras. Now, that being said, overall production in Honduras is still relatively healthy. Looking at it, probably about 5.4 69 kilo bags, which again, if you wanted to compare it to USDA, just for reference, would be about 6.2 million 60 kilo bags. But what we've mainly seen as a result of those hurricanes and some of that production drop is that mainly coming on sort of the low end of the scale. So mainly like your HGs, your physically low grown coffee. That's where most of those losses are being taken. Based on the market participants that I speak to, SHG is largely unaffected. I assess every single week an organic price for an organic SHG out of Honduras. Also, the production there largely unaffected. And Honduras still looking at a relatively good crop. But some of these weather concerns that they've had, especially with the two successive very major hurricane hits back in November, have sort of supported that. Similar kind of story in Colombia, not so much with weather, but just overall drop in production. And Brazil is kind of riding on the back of what's going to happen with their next crop. Generally speaking, all of these remain quite firm. Even given these recent exchange movements, we're still not seeing an awful lot of softening in many of these. We did see a little bit towards the back end of last year, kind of around September, October time. The things climbed down a little bit, but the bottom line here is that the premium that's being commanded by the Honduran HG, which historically would be, if we think back to those certified stock levels, those big orange bars saying that the vast majority of these certified stocks are Honduras. Well, that's kind of left a gap, because if you can currently command about a 20-cent premium for Honduran HG, then what is the incentive to actually deliver to the exchange and effectively take a loss on that? So it's left a gap, which has to then be filled by, as we've alluded to, Brazil. So this is what I want to spend a lot of time focusing on, is sort of the current state of play in Brazil, and taking you through a couple of the numbers that I've started to put together. So I think first we need to take a quick step back and look at the sort of macroeconomic situation in Brazil. On the left, I've put that US dollar and the Brazilian real exchange rate. I'm sure plenty of you are used to looking at this all day, every day. And you've seen that sort of since the sort of beginning part of last year, we've seen that rate deteriorate quite quickly. So the Brazilian real has lost substantial value versus the dollar, going from about 4 up to at its peak sort of early last year, about sort of 5.9. And then we've seen that fluctuation sort of around the sort of 5 to 5.5 region throughout the majority of last year and into this year as well. Now, there are a number of things that have caused that, and it would be almost, too big to get into the sort of minutiae of Brazilian politics. But the one thing that I wanted to point out in terms of maybe sort of looking at what could be on the horizon in terms of monetary policy is that Brazil's Monetary Policy Committee from the Central Bank of Brazil had a few meetings last month, one to discuss interest rates, and then another one to discuss basically quantitative easing, as stimulus measures to try and sort of accelerate the Brazilian economy, which had contracted by, I believe GDP contracted by about 4% last year. So they've been quite heavily affected by slowdown in consumer spending and sort of generally things that a lot of us have been throughout the pandemic. Now, as a result of one of those meetings last month, they were quite hawkish in their tone towards future interest rate hikes. There were a couple of factors given for that. Higher commodity costs, which I think anybody who looks at commodities outside of perhaps a sort of narrow window of sort of coffee have started to see that in other parts of the commodity industry. Oil's kind of the talk of the town right now. So they've seen higher commodity costs, higher input costs on a lot of these commodities, rising inflation, and then also higher local yield curves. So those will be on fixed income, such as typically treasuries, all of which would suggest that policy tightening might be needed. That being said, they are still, meeting to discuss. Part of it was maybe we need to rein in this stimulus spending that we're doing. But given the printed, I believe we'll be getting a sort of a final GDP assessment on, I believe it's the 3rd of March. So we're coming up with the 2nd. So within the next couple of weeks, we'll have, pretty good GDP figures behind Brazil. But they're still missing their inflation targets, not by much. It's still over 6%, but which sounds crazy for a lot of people, especially who are based in Europe. But they're still missing their inflation targets, and that ongoing need for that stimulus means that it's quite likely that Brazil may raise interest rates soon, but that might not happen until the second half of the year. Now, as and when that does happen, you would expect to see that the Brazilian real would then continue to strengthen versus the dollar. So that chart would continue to move down. Now, that being said, there's always the argument to be made that these things can be priced in before they even take place. And a little bit of the movement that we've seen over the last couple of weeks, since those meetings back in January, might be people already trying to position, for example, about like anywhere from a 25 to 75 basis point increase in the rate. So one worth keeping an eye out on. But generally speaking, I think it's worth mentioning that the Brazilian real remains still quite weak versus the dollar, which then it incentivizes selling at origin. Obviously, with being paid in dollars, you then get essentially a more competitive export price. So that is one thing to keep an eye out on. And then the next thing that's really sort of the main story, if you're trying to make sense of what's going on in Brazil, is the weather history. So it's difficult to attribute all of what they've seen to La Nina, but that does seem to have been a large factor, particularly in the high temperatures. So if you look back sort of over the last 6 months, you will have seen that if you see that map on the left, this is its precipitation as a percentage change from average, average being a 30-year average. And I'm unable to point at the screen, but if you look at that very, very dark yellow area in the sort of center-south region of Brazil, that's basically where most of the coffees grow. And you can see a little bit of green around that, some areas in Paraná and Espírito Santo, kind of, especially in the coastal regions, escaped some of the worst of it. But, around Minas Gerais, Goiás, a lot of those areas sort of in that center-south region were very, very heavily affected with their rainfall over the last 6 months, less than 50% of what they would normally see in an average year. Combine that with very high temperatures, and what you started to have was basically aborted flowering. So what happens when you abort the flowering? Cherries oftentimes fall off the trees, and once that happens, once cherries fall off, kind of all bets are off at that point. You have lost that for the next crop. That's the way it is. Now, we know that as we get into the next crop, so that'll be the 21-22 crop in Brazil, which will start harvesting around kind of April time, most likely. As we get into that, we know that's meant to be an off-cycle crop anyways. And historically, we tend to see, and we'll see in a second on some of these production figures, that tends to lead to a 10% drop on average between that and the previous on-cycle crop. Now, that being said, over the last couple of years, maybe 5 years or so, we've seen that relationship break down a little bit, and maybe the off cycles haven't been quite as big as 10% down. Whereas, especially with this particular instance, we're seeing, well over 10% down. But again, generally speaking, that's the way things seem to work. So we already know that was kind of in the cards, let's say, for 21-22. But if you start looking at estimates of how much this will have affected that, which I'll come on to in a minute, you start to see that the drop is actually quite a bit more severe than that. And then going back to the sort of La Nina statement, we have now had confirmation both from Australia's ABM and from NOAA in the US that we were in a La Nina situation last year. So La Nina, and feel free to correct me if I'm wrong in the chat if you'd like, is, if I'm not mistaken, I believe it's La Nina conditions are declared. It changes from one organization to the next, but generally speaking, if the sort of southern oscillation, which is in the sort of central South Pacific, is if the sea surface temperatures in that area are more than 0.5 degrees Celsius below average, and over a period of typically at least 3 months, that's when you start to declare La Nina conditions. And depending on how far below they get is sort of how severe it is. There's been sort of no really official proclamation, let's say, yet as to how severe the La Nina was. It does seem like it was perhaps slightly stronger than average, maybe not fully severe, but definitely a stronger La Nina, which also goes some way towards explaining the very active Atlantic hurricane season that we had last year as well. So we know now that based on the forecast, both from NOAA and in Australia, that we are likely to see this La Nina situation come to an end and see a more neutral view now on the INSO, so that El Nino Southern Oscillation, by around Q2 of this year. So over the next coming months, we should see that start to come to an end. Now, that should be good for development of the crop beyond that. So that would be next year's crop, or the 22-23 crop. And then one more quick point to make on this is that oftentimes you'll find that in these off years in Brazil, what farmers will do is, if, in particular, if they're not on an irrigated farm, which is, the majority of farms in Brazil is still not unirrigated. I mean, about, at best by now, about 25% of farms just in Minas Gerais are irrigated, and it's only right around there, and it hasn't been increasing very steadily for a while now. That was something that we're seeing more kind of 5 to 10 years ago. This sort of real investment in irrigation. So what they will do if their crops have been sort of particularly affected is they'll start to prune those trees. And so by pruning the trees back, you then see hopefully additional growth as the branches then sort of grow out and give you more nodes for the cherries to develop in the following crop. Now, by all reports that I've both read and from the traders that I've been speaking to, that is what has happened this year, especially with such widespread losses being expected. There's a substantial amount of pruning that's gone on, which, depending on the weather and all things being equal, should yield, you would expect, a larger crop looking ahead to 22-23. So again, next year's crop to be harvested. So now is everyone's favorite thing, I'm sure, which is why I start going through tables of production figures. So I'll try and kind of make this a little bit spicy, but I'm going to take you through a couple of production estimates. First from the USDA, from the most recent production estimates in December, and then I'll start going through and extrapolating out into the coming year, so 21-22, based on the conversations I'm having in the market, as well as reports that have been published by other market players. So if we look at these production estimates, and I've put 10 years of production here. Brazil, if you run all the way to the right, you can see 2020 to 21. So that's the crop that was harvested last year. So we're currently, still in producers trying to export that crop right now. You're looking, according to the USDA, at about 67.9 million bags produced. Colombia, 14.1, which would be the same as last year. Honduras, I think, is kind of an interesting story as well. And this is why I brought this up during the section on the diffs. The USDA view as being about 6.1 million bags compared to 5.4 million bags last year. Now, I mentioned that, they are looking at a drop of, potentially anywhere from about 120 up to, potentially over 200,000 bags off of that. But that's a pretty big step up from the previous year. And then Vietnam, the 29 million down from 31.3 the year before, that has largely been what's played out. And I'll come to that a little bit later on when we actually start to discuss Robusta. But I did just want to quickly point out that 67.9 there in the top right as we start to move through these tables. So these are the production estimates based on the conversations that I have with market participants, as well as reports that have been published by a number of people. So Comexim, so probably the largest exporter of coffee in Brazil, we're pegging this past year's the current crop at 68 million bags of production, and that's a combined Arabica and Robusta or Conilon total. And then looking next year at 53.9 million bags. Now, my contacts here at Mintech that I speak to in the industry, which are made up of roasters, traders, a couple of producers at origin, give a much higher figure. Consistently, they're seeing 2020 to 21. So again, the crop year that we're in right now, as being in excess of 70 million bags, and on average about 71.5 million bags. And then looking next year at about 54.5 million bags, again total. The majority of that being made up of Robusta, which seems to have been the Conilon crop in Brazil being less affected than the Arabica. The majority of that decline that you're seeing year on year is mainly in Arabica production, not so much in Robusta. Conab have put out their estimates in Brazil, which I'm sure many of you have seen. What I've done for the sake of trying to come to an average is, and you can see the next row down, added 5 million bags to that as a sort of general rule of thumb that I've personally practiced for many years now, and having spoken to a few people in the industry as well who have also done this. Generally, Conab seem to underestimate the number by about 5 million bags. So I've just added 5 million just to show you what that looks like. And then Sonex, Marex, and Rabobank have all put out their own estimates. Rabobank's perhaps being the most interesting for 21-22 because 60.7 million bags for 21-22 would be far and away the highest estimate from anybody that I've seen or anyone that I speak to as well. But if you average all of those together, excluding the original Conab, I'm using the plus 5 million estimate, you come to a 2020 to 21 production of about 67.7 million bags out of Brazil. And then looking ahead to this coming crop, about 54, a little over 54 million bags for the coming crop, which again, about 20 million of that roughly is Robusta, and about sort of 34 million of that would be Arabica. And if you quickly refer back to that USDA estimate on the previous page, you can actually see that the average estimates that most other people have published are actually lower than the USDA. But again, all of the contacts I speak to tend to be a lot more bullish on production this past year. So looking, again, excess of 70 million bags. So all of that kind of begs a question: why is New York still range bound between 120 and 125? I think it's a question that a lot of people have been asking themselves for several months now, since the full scale of what's going on in Brazil's production drop has started to become apparent. And so let's start to kind of take some steps towards answering that. So again, I've put up consumption estimates, which are from the USDA as well. And I wanted to quickly highlight a few things here. Again, looking at Brazil at the top row and going all the way to the right, you can see 1920 consumption estimates from the USDA at 23.5 million bags. And this is domestic consumption, might I add. Whereas looking at 2020-21, you're seeing again the same number, 23.5 million bags. And then as you start going through some of the major players, if you skip down a couple of rows to the European Union, you're seeing a marginal increase from 1920 to 2021. If you're looking at the US, again, you're seeing sort of a marginal increase from 1920 to 2021. Now, this is potentially of interest to me because of all of the people that I speak to in the industry, the general view is that the potential increase in consumption from at-home consumption, so people buying instant or roast and ground to actually make at home, has certainly not offset any decline that they've seen in out-of-home or retail consumption. That is pretty much the universal view, is that consumption has gone down. So I would not be surprised at all to see kind of in the mid-year estimates coming up from the USDA in several months' time, seeing some of these domestic consumption figures start to be revised down. And we also know, according to Cafe in Brazil, that we've seen a drop of about 12% in exports in the year so far. Now, Cafe are a little bit interesting. They're using a year in Brazil as being April to March, whereas with the USDA, I believe they're using a July to June year. So there might be a little bit of slippage there, but it lines up with the crop cycle well enough that it shouldn't be too far off. And that 12% drop would not be reflected in some of the figures that the USDA have put together. So I would expect to see an update on this. But I wanted to quickly point out that's an increase in domestic consumption as of the December update, which does contradict a lot of what's being heard in the market. And so what I now just want to quickly do, and I promise there's not too many tables left, I promise, is start extrapolating this out, looking at next year, using some of the USDA figures as a base, but then using some of those estimates from the other sources that I heard several slides ago as sort of like, additional inputs to start looking at what we might see the ending stocks being. Because that really, to me, is the key question of all of this in Brazil, is what do things look like at the end of 21-22, and looking into 22-23, is there a deficit in Brazil or not? That really is kind of the main question. So if we look at this table and we do, again, let's start with 2020 to 2021, so that second to the last column, you have the beginning stocks of about 1.8 million bags, production of about 67.7 million. Imports are negligible, but I've simply left them on here. So if anybody wants to follow along with a calculator, you can do the sums yourself and get the same numbers. But you get a total supply in Brazil of 2020 to 21 of about 69.6 million bags. So that's the production plus any stocks left over domestically from the previous year. And then you have exports of about 41 million and domestic consumption of about, again, there's that 23.5 we were just talking about, leaves you with ending stocks of about 5 million bags. Now, if you start looking at 21 to 22, this is where, I quickly neglected to mention the production figures are those averages that I have. So not the USDA production figures. These are the ones that I was talking about from the variety of sources. That 67.7 for 2021 and that 54 million for 21-22. So if we look at 21-22, you can see that's beginning stocks of about 5 million bags, total supply after production of about just over 59 million bags. And if we assume that exports stay roughly the same as they were in 1920, so i.e. sort of mainly pre-pandemic for the most part, and domestic consumption, again, remains unchanged from the last 2 years. So again, being quite bullish in these numbers, you end up with ending stocks of minus 4.5 million bags in Brazil. So you see a deficit suddenly. And to quickly explain stocks to use, what that is simply ending stocks divided by that total supply. So it's measuring, in essence, how much is left versus what would ordinarily be consumed. So, that 7% for 2021, that means that 7% of what was available in 2021 is left. And then looking at 21-22, minus 8% is left. So in essence, there is a deficit in 21-22. Now, again, this is being, all things being equal, quite conservative about these exports and this domestic consumption in Brazil. So what if we do this a little bit differently? And this is where I think we start to get to a situation that is perhaps a little bit more realistic and then needs to be contextualized globally real quickly. So exports in Brazil, let's say they fall by 10% in this past year, so 2020 to 21. Let's say that they've fallen by 20%. Again, we know already from CCAFE that they're actually lagging about 12% behind the previous year, and that they don't recover to 1920 levels until 21-22, which in this case, I'm pretending that that's starting in July rather than in April. But again, it's a relatively minimal slippage there. Well, if we change is starting in 2020-21, we have those beginning stocks of about 1.8 million bags. We have that total production of 67.7 again. So total supply of about 69.6 million. Now, let's say that the exports in 20 to 21 were down 10% from 2019 to 2020, which seems like a pretty reasonable, if not actually slightly conservative estimate. Then you see exports of about 36.2 million bags. Let's leave domestic consumption unchanged on the year, and you end up with ending stocks of about 9.8 million bags. Carry those forward to the next year, to 21-22, go through the exact same thing that we've already discussed. Let's say that the exports rebound to the 2019-2020 levels in the following year, and let's say that domestic consumption still remains quite firm. Now, based on the discussions I've been having with people at origin in Brazil, as well as several reports that you probably very well have seen as well, consumption in Brazil does actually seem to be holding up quite firm. Coffee consumption, particularly that Conilon, and even an increasing trend towards Arabica consumption in Brazil as well. I think it's prudent to stick with that 23.5 million bags domestic consumption figure. And you can see that the ending stocks now come to a very, very, very minor surplus of just about over 200,000 bags. So that leaves us pretty short by the end of 21-22. But what you need to do is then contextualize this against a number of other factors. Well, we've already just discussed 20 minutes ago about how those certified stock levels, we're increasingly coming maybe only about a month away from half the certified stock levels being Brazilian stocks. We also know that, for example, GCA stocks are very, very healthy right now. And we also know that if you strip away, even if you keep Brazil in, my apologies, if you look at the global supply of coffee, the USDA are calling for, millions of bags of surplus by the end of 2021. So we know that there will be a lot of extra coffee out there to, let's say, pick up the slack from what's happening in Brazil specifically. And then again, also remember that we've been a little bit conservative in Brazil's production figures. And so the USDA is forecasting for the end of 2020 to 21 total about 41 million bags surplus globally. So that's an important factor. Again, the people that I'm speaking to in the market are giving production figures for 2020 to 21 of well over 70 million bags. So quite a bit higher than a lot of the other trade reports that have been issued. So we can start to contextualize this 221,000 figure there in the bottom right and say, okay, even if that is the case, and this is being, I think, still relatively conservative, we are still looking at other places and other sources for coffee, even Brazilian origin. So where does that kind of leave us? Well, I think the first point to make is that to a large degree, if you're running through the numbers like this and just doing relatively simple sums, that's why we've not seen the rallies on the C contract that had previously been envisaged. So yes, we have seen that recovery in certified stocks. That is one reason that's helping sort of provide a good level of resistance. We are also seeing a continued weakness in the Brazilian real. And we are seeing, a sort of again around 20,000 lots net long in the commitment of traders in New York, which does mean that they have, let's say, room to sell, all things being equal, if they were to unwind all of their positions at once. Now, could a rally still happen throughout this year? Yes, absolutely. I think especially as we start approaching the end of the 21 to 22 harvest in Brazil, because if, let's say, exports suddenly start to rebound much earlier, so let's say in the 2021 year rather than 21-22, Brazilian exports rebound to pre-pandemic, if not perhaps even greater than pre-pandemic levels, then yes, we start looking at perhaps several million bags of deficit in Brazil. So that is still a worry. That increase in interest rates that I mentioned earlier could see the Brazilian real strengthen, which could see that then be very, very conducive to price development in New York. But I think this also leads us to maybe the other elephant in the room that's been discussed quite a lot recently, which is that is this supply tightness that we're probably looking at in Brazil over the coming 12 to 18 months, is it being priced into the exchange, or is it really being priced into the diffs? And that almost goes not for Brazil, but really almost for everyone at this point. I've mentioned that those differentials that we saw earlier remain about 20 to 25 cents higher than they would have over a year ago at sort of normal levels, let's say. So I think a good argument is being developed that rather than being bullish C market, it might be a case that people are more bullish diffs. And we might see diffs, continue to remain very well supported around these current levels and potentially even have room to grow as, for example, a very, very tight balance in Brazil that we've looked at already as being a possibility could see Brazilian mainly discounts right now move towards, premiums. And if you start seeing that, and you start seeing, for example, a semi-washed Arabica being a substantial premium to the exchange, then suddenly that current supply of semi-wash that we're seeing delivered into the exchange suddenly dries up as well, because then, like Honduras, we start seeing sort of a lack of incentive to sell and effectively take the loss of the premium. So that's kind of the current situation in Arabica right now. And in general, what I found is speaking to my network of contacts, everybody has not only radically opposing views, but very much a kind of, it doesn't really seem to have a very clear direction right now. There are certainly arguments for the C market to rally, but I think there's a very, very compelling argument looking at sort of the evidence I've just presented that this rally has occurred in the diffs and could continue to occur in the diffs and not in the C market. And then looking at Robusta, Robusta is a funny market as well. Looking at 2021 production in Vietnam, likely to be about sort of 25 million bags, drop of about 16% year on year. Now, that's the USDA are calling for more like about a 7% drop year on year. A lot of that's being driven in Vietnam by poor weather and then also chronically low prices. I think it's probably not controversial to say that nobody's really been caring a lot about the London contract for a while now. It's been pretty pretty dismal, especially from a managed money perspective, like from a non-commercial perspective. So these chronically low prices have also led to neglected husbandry in Vietnam, which again is a problem that I've said we've seen repeated to some degree in Central America as well, because those premiums aren't still making cost of production in a lot of those countries, or at least just coming very, very close to it. And so if we look at that exchange price, I've only plotted this back to April of 2020, as that's around the time that we started assessing these differentials. But you can see that blue line, that ICE Robusta, has been trending up very, very slightly. But if you go back several years, we've been in that kind of around 1100 to 1400 range for quite some time now, and we've seen that increase mainly on the back of expectations of a lower crop in Vietnam, which is pretty much exactly what we've been delivered. Now, that being said, if we know that, then why would the grade 2 differential that you see, the premium there on the screen on the right hand side, so around about $100 right now, why would that still only be about $100 and not, 200? Like, we did see some very, very high, premiums sort of towards the middle of last year. Well, I think it becomes kind of self-evident in just a moment. And I think we probably all know what's going on with the freight situation that I alluded to at the beginning. The commitment of traders, I was going to quickly show. Again, you can see that very strong correlation between the managed money net position and the robusta contract there on the left-hand side. And they are still actually net short in London by about 22,000 lots net short. So there is still room to buy into this market as well. And you can see, if we're talking about confirmation of trends, you can see that tick up just in the last couple of weeks of that yellow line suddenly starting to move back up, actually now towards more about the 14,000 net short position. And so why would London, though, otherwise kind of just really be languishing, I guess you could say? Well, it's that lower production Vietnam has seen buying interest switch to Brazil. Again, I mentioned that even on the most conservative estimates of what we might be looking at for the 2021 crop, the 21-22 crop coming up in Brazil, very few of them actually see any grand decreases in cannellon production. And we have seen cannellon diffs rise as a result of people switching potentially from Vietnam to Brazil. That's part of it. But really, the lower demand in changes to consumer buying. Now, this is very much regional, and I think it's difficult to extrapolate globally. But we have seen sort of a renewed interest in things like organic, fair trade, and various other sort of specialty single origin coffees amongst consumers in the at-home side of the market. Which, friendly reminder, we also assess those here at Mintech every single week, just in case you're looking for them. So we have seen that switch, let's say, towards those nice single origins, which 99 times out of 100 will tend to be Arabica. But the freight issue that we're seeing is really the key trend here. So freight prices in Asia on the left, I've put a price that we have here at Mintech for shipping a 20-foot container, in this case from Shanghai to Northern Europe. This lines up pretty well with prices out of, for example, like Ho Chi Minh to Northern Europe. As if you were to go back, let's say to about a year ago, you'd be looking at around about $1,000 per container, roughly. And depending on the sort of relationship that you might have, like with a freight forwarder or some sort of broker that you're using, you might not be seeing these levels of increases, or you could even be seeing dramatically more than that. But at least the kind of what you might call competitive market price for a 20-foot container out of Southeast Asia right now is running around about $4,500 to $5,000. I've heard offers being made at $10,000, $11,000, $12,000, especially if you're looking for a single container prompt shipment, and you don't have maybe an existing client relationship. You might be paying easily double that price. But in general, assuming that you have a good relationship, you might be paying up to this price here on the left side of the screen. And that is a real problem for sellers in Vietnam. So, obviously a lot of this export, they like to get done before Tet. That's now kind of coming to an end of the week, and we've already started to see a few offices opening back up. I'd expect to see potentially more selling action and new offers starting probably Monday of next week. But there's all of this freight problem is being caused by essentially a lack of containers. There are not containers getting back to where they need to go, which in this case is East and Southeast Asia. They are being stuck at ports outside of that region. A lot of that is driven by this kind of new round of lockdowns and decreased trade in places like Europe and North America. And so the containers are essentially getting stuck. And once upon a time, it was actually economically viable to take those back in the opposite direction, essentially either empty or potentially with some sort of mixed consignments, but for very little money. That doesn't make sense right now. There's no economical means of repositioning those containers just yet. So they're very, very slowly making their way back, but it could potentially be well into the second half of the year, based on the conversations that I've had, till we start to see sort of a return to normal. And so these commodities out of Southeast Asia, including Vietnamese Robusta, are fighting for space with other goods out of China being on a similar route. So things like PPE, consumer goods, because we're all stuck at home buying stuff on Amazon out of China. So all of these things are looking to be are looking to compete against commodities right now. So right now, a lot of coffee buyers that did have contracts for delivery in kind of Jan Feb that may have been bumped off a manifest or having to go renegotiate new prices are seeing these prices on the left, potentially $5,000 or even more, and looking to delay those shipments at least into Q2 just with the hopes of seeing these prices come back down. We've seen this affect not only coffee, but around my sort of wider team, a number of other commodities as well. Looking at things like desiccated coconut, um, uh, oils like palm oil coming out of Southeast Asia, all of these have been affected by this exact same thing. So we could still be several months away from seeing an end to this, which is why we're still seeing, I believe, quite reasonably attractive, almost normal, if you will, Robusta differentials. So again, that sort of grade 2, 5% black and broken being a premium of about $100 per ton, being quite competitive because unless you got very lucky and they are not bumping you on the manifest and they are sticking with the price that they quoted you 6-12 months ago, nobody wants to take the hit on paying thousands of extra dollars per container just for the freight. So in summary, that's deferred shipments, very little purchasing going on. There is the potential that we are seeing lower Robusta demand until that out-of-home demand starts to recover. TET just began last week, so there's really been not much selling so far this week. The producers are waiting for higher prices, as you would assume. Even before TET, they're waiting for higher prices, and as we get into next week with offices starting to reopen, we might continue to see that happen. Conilon premiums in Brazil have started to rise, and most buyers that I speak to are content to just buy stocks outside of origin, hand to mouth, out of existing stocks in places like Europe and North America until this freight issue is resolved. So the pressure will stay sort of more on the sell side of the industry until at least after the Lunar New Year. And depending on how long this freight situation tends to go on, that will continue to be problematic for Robusta. So with that being said, I think that kind of gives you a pretty big overall view of the market. Always, feel free to get in touch with me. I put my phone number here on the slide. You can get in touch with me at that email address. If you're curious about Mintech and what it is that we do, feel free to reach out to us. We're happy to do that. And thank you very much for attending.